Good evening and welcome to this session of the live coaching classes conducted by the Board of Studies of the Institute of Chartered Accountants of India. In the last class, we were speaking about accounts of companies and we came up to one stage. So before we get into it, let me greet all those people who have put in a good evening message there. Alok Shivlani, first in, Jyotija, Dhyanesh, welcome sir. Chatan Gadia is there, Geet Chaugan, Sushil Kumar Barik, and absolutely no problem. Don't worry, the video is there. You can always look at it whenever you want. Mohammad Aslam, welcome. Priyanka, Parthasarthi, welcome sir. Kushi, welcome. And Mohammad Aslam again sir with good evening. I don't know why he's speaking it twice. And Kavita Chandak, Sunil Kumar. Wow, Sanil. Samir is there, etc. Nikita is here. Manoj Kumar Thakur, welcome sir. Roshan Thomas, good show. So happy that so many of you have acknowledged your presence here, and I'm sure there are so many others who have not put their message here, but they are there listening to all of you. Good evening. And as Dhyanesh requests me, I'll start off with our usual prayer to the God of Internet, as we call them, as we call him. Sahanavavatu, Sahanau Bhunaktu, Sahaviryam Karavavahai, Tejasvinavadhitamastu, Ma Vidvishavahai. Om Shanti, Shanti, Shanti. So good evening again, and let's jump into the topic. And since we've covered quite a lot of distance, let's quickly move to where we left off the other day. In fact, there was some doubt that was being raised by one gentleman about all these subsections and all that. Let me assure you that the subsections given in the slides are absolutely as per the Act. So 1, 2, and 7 are covered in this slide. So the C is actually, rather 1 is covered here, 1 is covered here, 2 is covered here. You can see that actually. 1 is covered here, 2 is covered here, 7 is covered here. 3 is a larger section, the content of which is given here. Very clearly, I have mentioned it. So no doubt, no need for any unnecessary doubt regarding this. Because I remember why. Because see, this entire slides, God gave me this great opportunity called pandemic. So yeah, why? Because I was sitting idle in Coimbatore and in my daughter's house when I had nothing much to do during pandemic. It's at that time that the institute wanted me to undertake this coaching on live coaching classes. So that was the first time I prepared these slides. So I had a lot of free time. I used to sit every day about 3 to 4 hours, refer to the BAR Act, refer to the Board of Studies material, try to simplify it. And there was a labor of love, which is why I am not, whenever somebody says something wrong or questions me, I will be worried because I have done so much effort to do it. How come this gentleman is telling like that? I used to think. So as such, no problem. And you can rely on these slides. In fact, how you should use my slides? You should use my slides as a last minute preparation. So you already read the Board of Studies material. Now, after some time, we can't keep on reading that. These are nothing but extract from that. It's an extract from that. That extract is not. So now, if I am going to extract something from a larger content, it will be foolish of me to give the entire content here, right? So some portions which are very theoretical, very boring, content, only content and nothing to be taught, I would have not put it here. Or I would have put it in simplified form. There you might want to go there and study and come if necessary. Otherwise, the crux, the legal part will be here from the exam point of view. Some small subsection, something, maybe I would have left out. Even that I doubt, but once in a while. Nidhi company, that, what is that, IFSI, sometimes, chalo. Okay. So we've seen all this and moving on, we saw reopening. Okay, reopening. I also contextualized it. Okay, so we have Prachi Kapoor joining. Hi, Lakshmi has come. Abdul is here. And Abhishek Pandey, welcome sir, welcome. So reopening we have seen. Now friends, just to remind you, reopening is something that will happen when any of these authorities you see in this slide feel that there is some fraud or something, and they discover that the accounts have been fraud. So in order to regularize it, they will apply to the court or the tribunal as the case may be, and once the court or tribunal passes the order, then the accounts will be revised accordingly. This is usually done only when there's a fraud. This is a knee-jerk. This section is 130 is a knee-jerk reaction to Satyam scam. To my knowledge, I doubt how many companies would have had to have this section invoked for them. I don't have statistics, but I doubt it may not be a very huge number. So, like that. Okay. Things like that. Okay. So, this is how it is. Now, we'll go on to 131, which is similar but slightly in a different context, which is voluntary revision of financial statements or board's report. Voluntary revision of financial statements or board's report. Voluntary revision. How is 130 different from 131? 130 talks about application by a body, and thereafter the company has to do nothing. Once the court says pass, you revise your, reopen and recast or revise your accounts. That's it. Okay. And that will usually be as part of a serious fraud investigation. And there will be a substantial falsification of books. So which means the books are to be corrected. So that is when 130 will be invoked. 131 is the directors themselves feel that there is a non-compliance with section 129 dealing with financial statement or 134 dealing with board's report. So when they feel that one of these provisions is, something is missing there. See, 129 is wide enough. It could be anything, any issue connected with accounts, notes, everything. And 134 is the board's report. So any of these, if they feel that there is a need to revise voluntarily, they can go for, I'm so sorry. They can go for, an application. So the board will prepare revised financial statement or board report. It may prepare in respect of any of the 3 preceding financial years. And they can apply to the tribunal for prior approval. Before they go ahead and revise it, they will have to get the prior approval of tribunal. Then before doing anything, the tribunal will give a notice to the central government income tax authorities and shall take into consideration representations, if any, made. Because this voluntary revision may involve increase in profits, increase in turnover, etc. If so, then there might be a need for reopening of the assessment, whatever, and so on and so on. Because let us assume that you are voluntarily revising your financial statement 3 years before. Financial statement you are revising now. If the profit is going up, there is no way you can revise your return. You cannot revise your return now because the time for revising the return is now gone. So no other go. You have to go to the income tax. So that is why they themselves inform them and say, look here, this guy wants to revise. Can I go ahead? Then they will immediately wake up and they will they will give a 147, assuming they will do that. And then you get one more opportunity to file a revise, to return, offering the income or whatever it is and paying the tax. So no other go. No. How else will you file the return? Okay. Or else you have to go to the jurisdictional commissioner for condemnation. So you can go through this process. Okay, good. So that is how it is. We have a question from Kavita Ji on what is form AOC. There are many AOC forms. See, AOC is in any chapter when they are giving form numbers now, they will use some kind of an abbreviation of the chapter name. So AOC is account of companies. Okay, so copy of order of revised financial statement and board report to be filed with registrar. Okay, so that the registrar will take it on record. This is meant for sometimes genuinely there could be an error in the financial statements, which could have been overlooked. The error is human. Okay, so that they could have made, and that would have been okay. So they given then conditions for voluntary revision. such revised financial statement or report shall not be prepared or filed more than once in a financial year. So you can do revision of financial statement for only more than once in a financial year. Okay, means they are only talking about you cannot revise financial statement more than once in a financial year, not for a financial year. I hope I'm making that propositional difference here, whether you can understand it. See, in means in that year you cannot make more than one. Whereas for means for that year you cannot make more than one. I don't see that meaning here. If that is their meaning, then their English is wrong. Okay, they should say more than once in respect of or for a financial year. Okay, so that is not the wording used in the section. The detailed reasons for revision of such financials. In fact, one student once very intelligently asked me, can I revise this accounts for the same year again? I don't see any problem, but you can't do it in the same financial year. So the detailed reasons for the revision of such financial statement or report shall also be disclosed in the board's report in the relevant financial year in which such revision is being made. See, the minute you go for voluntary revision, automatically you will come under the MCA scrutiny. They will want to know what you are trying to do here, why, and all that, how it missed the audit, how they happened, and all that. So generally, they can only do it for this. Where copies of the previous financial statement or report have been sent out to members or delivered to the registrar or laid before, the revisions must be confined to the correction in respect of which the previous financial statement or report do not comply with 129 or 134, and the making of any necessary or consequential alteration. That's all. You need not give the entire thing again. It is only enough if you highlight the correction being made so that they can read it in conjunction, in addition with along with the already sent financial statement. Again, a rarely invoked section. I doubt if any company would have taken. Though this might be more frequent, because there could be companies where they have done something, then the second year or third year somebody points out and says, hey, this is wrong, you should not have done it like this. So they may have to go back to the first year and change it. Certain Ind-AS adjustments may need earlier period also. So instead of doing it in the current year as a prior period, they might want to go back, revise, and bring it forward for those years also. Okay. So that is how it is. Since Muhammad Aslam makes a big issue about typos, I will change it. Okay. With this, I think should not be a problem. Yeah. Alteration. Now, the central government may make rules as to the application of the provisions of this act in relation to revised financial statement or revised director's report. This is just giving the power to the central government to make rules. And they can make different provisions according to which previous financial statement or report are replaced or are supplemented. Make provisions with respect to the functions of the company's auditor in relation to the revised financial statement or report, what he will do, because his position is really deep trouble now. What were you doing? Why have you not pointed out? Is a bigger question. He has to answer. What should he do? And all. Then maybe he might also have to give a reasoning. Make provision with respect to the functions of the company's auditor. Require the director to take such steps as may be necessary. Okay, good. So, yeah, Mr. Shankaran is here from Nellore. Shankar is here from Nellore. Vanakkam. And Nitesh Bhai Patel, welcome. So, I think now Manoj Kumar, our friend Thakur, will be happy because last class he was very tensed. Sir, are you skipping like that? No, he was asking. Don't worry, I will not skip. What I will do again and again is make it logical for you to understand. That is why I'm putting it together. That is about it. Once upon a time, students will not even read Board of Studies material. They will blindly come to my class and only listen to my class and go. They will read only what I have taught. And they will go and they will get very high marks in the exam. Not joking. Okay. At that time, Board of Studies. But now the Board of Studies material is very good. It is very extremely well prepared. It's good for revision. More than enough for your entire. You don't have to buy any book, etc. It's enough if you use the downloaded PDF version or a copy of the book. They are also supplying. First time, I think they supply the physical book to you. You can use that also. Good. Yeah. Maybe your comment is correct. Our comment, yeah, exactly. Once you make a mistake only, they will come and sit and do all sorts of regulation. Otherwise, they will trust you. That seems to be the way they work. Okay, we come to something called the National Financial Reporting Authority, NFRA. Now, see, till quite recently, the Institute of Chartered Accountants of India was and is still the supreme authority on accounting and reporting, financial reporting and accounting, etc., etc. We are. But consistently, there has been a failure, especially by large firms, to comply with the accounting standards or the auditing standards, etc. And so consistently, and in many cases, it has been big firms. I am not trying to point out big firms here. I'm saying it has been the multinational firms that have been. But again, it is again possibly an error of prominence where we get to hear only about those cases where multinational firms are involved. Maybe there are other firms also, but not of that materiality. The material cases are audited by them. So when some fraud happens or when some non-compliance is brought to highlighted, it becomes a major issue of. So therefore, somewhere the Ministry of Corporate Affairs, when they came into existence, around that time, the Satyam scandal took place in 2009. Almost as if the scandal was waiting for MCA to come, and the scandal took place in 2009. And the Standing Committee on Finance, attached to the Ministry of Finance, proposed the concept of the NFRA, National Financial Reporting Authority, for the first time. So the Companies Act 2013, which came then, MCA had come, and there was a big pressure to do something instead of sitting idle. So instead of wasting their time, they thought as well the 1956 Act will scrap and will create a new law, and which they then went on to do, called the 2013 law. And therein they tried to introduce the regulatory framework. Okay, so then the whole thing got approved, and the NFRA is an independent regulator for the auditing profession. So the idea is the NFRA will regulate the auditing profession and will strive to improve the transparency and reliability of financial statements. Okay, so, somewhere they felt the ICAI needed a watch and needed some kind of a oversight. Agreed. I'm not trying to question that, or I'm not trying to say that is right or wrong. They decided to do it, but then the real question should be, are they capable of doing it? One, two, are they doing it in the right way? That's all. If they are able to do it in the right way, see, it is not as if such bodies are not there abroad. For example, you have SEBI itself, which is a regulatory authority for capital markets. Okay, so it's not as if we don't have regulating authorities or that who are having. But one more authority, especially cutting it too near. If you look at their purpose, you'll find that it's very, very cutting it too near. There's a lot of overlap with what the ICAI now does and what these gentlemen are trying to do. So, 132 says, 132 now gives the statutory recognition to the NFRA. Earlier, it was done only by a ministry order. Now it is being done by an act of parliament, which said the central government may by notification constitute the National Financial Reporting Authority. That is why the cabinet approved the proposal in March 18. So that but already the NFRA was there, but that got parliamentary approval in 18. Right. 13 itself we have introduced. Then a lot of controversy. Finally, it came. The central government may constitute an NFRA. Here, the central government is the Ministry of Corporate Affairs. Notwithstanding anything contained in any other law for the time being in force, the NFRA shall make recommendations to the CG on formulation and adoption of accounting and auditing standards. See, this is too near where we are doing what we are. See, we already have a accounting standard board. We already do a lot of work. Our institute approves it, the Central Council approves it. So now they're saying we will take this. But they're saying the role of NFRA is to make recommendation to the CG on formulation and adoption of accounting and auditing standards. So sort of a reverse entry route. So any accounting standard or auditing standard proposed by the institute has to go through NFRA and be recommended to CG. Then CG will notify it through 133, which we will see later, as an accounting standard, applicable accounting. But this is only for corporates. As far as we are concerned, our institute guides us. So whatever the institute tells us, I have to follow. But whatever the corporates, they will be going by this, the NFRA's thing. Yeah, there are NFRA-like bodies in almost all countries. You can check out. For example, we have, in America, there we have a body there. SEC is there in UK. US also you have SEC, Securities Exchange Commission. A lot of bodies are there. They're not exactly like this. Not exactly like this, right? Not exactly like this. See, that is why you see the IFRS, IFRS itself is a bigger body. It's an international body. That is why, if the first pressure for us was in 90s when we liberalized. The minute we said we are going to liberalize, we are going to open up the economy, etc., etc., etc. The first things that the multinational firms and the whole group of them came and said to us, to the government, was, look here, you can't globalize unless you align with IFRS. So adopt IFRS. Scrap the accounting standards given by the Institute of Chartered Accountants of India, like that. So on and so forth. So at that time, central government would have agreed. There was a lot of hue and cry, and finally they compromised and said, let's not go for IFRS, let's go for your so-called IND-AS, which would be IFRS clone, which will be almost like IFRS, but not a little bit different, but IFRS. So that we'll get the IFRS flavor, but it will be in Desi, something like that. And we refused to take IFRS and all that, which became a sort of a winner. At that point in time, this NFRA was also slipped in. When IND-AS came, I said, IND-AS, we will announce it and we will take care of it like that. Another pathetic joke was when IND-AS was introduced for the first time, company secretaries used to come and give lecture on IND-AS. In fact, one company secretary came and said, what is your topic? The beauty was it was a conference for chartered accountants. I am addressing them on company law. A chartered accountant, but of course, I'm also a company secretary. And this gentleman is a company secretary, simple as it is. He's addressing them on IND-AS. I said, hey, come here. What do you know about IND-AS and all? He said, no, sir. I'm not talking on IND-AS. I'm only talking on convergence. That is, at that time, they had different dates for different, adoption of IND-AS. So this fellow was only giving a talk on when it will become applicable to who, which is circular is there. Government, he was just going to explain that circular to people. That's all. Then I asked him, are you going to talk anything about any specific IND-AS like that? Then he said, no, sir, I'm not going to do that. Please, if I don't ask any questions, I don't know, like that. He pleaded and then he ran away. And he took in fact, he refused to climb the dais till I promised that I will not ask any question on accounting. Anyway, so that is why that at that time MCA had given so much importance to IND-AS and all that the company secretaries who were early adopters, they immediately said IND-AS, they try to talk about it. Monitor and enforce the compliance with the standards. See, this is a very nice role, which normally ICAI actually doesn't do, real sense. But MCA now, through NFRA, they will do it. Monitor and enforce the compliance with the standards. Oversee the quality of the service of the professions and suggest measures required for improvement. Wow. Perform such other functions relating to the above activity. So, it's too near to our thing. You want to know what happened, or you are telling what happened? You are telling it happened because of Satyam. See, what happened in Satyam, you want to know? Yeah, you want to know what happened in Satyam? Is that what you are asking, Mr. Danish? Or are you telling us that because of Satyam scam, only MCA had constituted NFRA? Totally agree with you. Because of that, only NFRA. Almost that was all linked. NFRA, everything linked. Okay. But what happened in Satyam scam, if you want, then you confirm it once again. I will try to talk. Okay. Yeah, the NFRA is like any other body, like SEBI, as you say. ICAI that way is different. See, that is where you have to understand how ICAI functions. Institute of Chartered Accountants of India is not a government body. Now, in that sense, we are formed by an act of parliament. Definitely, we are monitored by MCA, etc., etc. But basically, we are independent. That is what is the real issue there. We are an independent body. See, I am a member. It's my membership. So the members and their elected representatives run the institute. Of course, we have monitors, we have people watching us on the committee, council, etc., etc., etc. But bottom line is, we have a president who is elected member of the institute. No other person can become a president of the institute. Only a member who has gone through the process can become a president of the institute. So that becomes a little bit of a difference. Whereas NFRA will be having government servants, will be run by government servants. ICAI is not run by government servants. ICAI is run by members. We have an administrative setup. We have secretary, etc., etc. But the ultimate decision-making body is the Central Council, which is nothing but mainly members. Of course, again and again, I give that point. That we have governmental intervention. We know we give them a lot of importance. We know they are watching us. We obviously, because we are a national body, just like, think about it, the Indian Medical Council. We are very much like Indian Medical Council. The Indian Medical Council is responsible for medical knowledge in India and also the medical services. Similarly, we are responsible for accounting knowledge in India and the provision of accounting services, both as practitioners and as employees. Yeah. So, see, just to give a background on Satyam quickly, because if you understand Satyam scam issue to an extent, you will be able to appreciate when you come to auditing more. I do not again tell you in auditing, because again in auditing, you will find many stringent provisions controlling auditors have come because of Satyam. So, without going into personalities and names, MCA full form, Ministry of Corporate Affairs, madam. Ministry of Corporate Affairs, MCA. Okay, Ministry of Corporate Affairs, not Master of Computer Application. Ministry of Corporate Affairs, MCA. You can't forget that, yeah. Wherever we use the word central government, central government in most of the context in the Companies Act, central government means Ministry of Corporate Affairs. Again, it is divided now. Minister is there, right from the minister, right down to the secretary, right down to the ROC, Register of Companies, regional director, additional director, deputy director, director, everybody is central government. Okay. Good. Now, the Satyam scam basically was simple. There was a gentleman, Mr. Ramalinga Raju, who was running Satyam. Now, he was under heavy pressure for showing profits because his entire funding was based on valuation. And that valuation is based on maintaining a certain minimum return to his funders and all, which meant that he needed to show a certain profit. Whereas his business, he was not able to generate that type of profit which he had already promised due to many reasons. Okay. Now he started, so that's where the problem. So what he did, he took a cool route. He started boosting. How to boost? He boosted the sales by bogus bills. Now, I can put bogus bills, but then if I put, say, so many bills, suddenly the profit will go up. Immediately the mismatch will be there. Therefore, he also started boosting the cost. How to boost the cost? Main cost for a software company like Satyam was salary. So he started creating dummy employees. Shall we say, non-existent employees, shadow employees, who used to pay salary, PF, etc., and onboarded and all. So deeply late fraud. People were there. So that's one thing. Then expenses great. Then profit is there. So year on year, he showed higher profit. So in effect, the profit is not there. So here he has created profit, but that profit is not available in any asset except bank. But bank balance is not that much. So our man, that is where the ultimate fraud, which is why many people remember Satyam fraud as bogus FD printed, bogus FD was printed. Why will he print bogus fixed deposit receipts? Because he needed to show on the asset side some investment of this profit. So he created bogus fixed deposit receipts. How he could do that is the real fun. See, Satyam was in a peculiar position. Along with this, Infosys, Satyam, TCS, these were the guys who were developing software for the banks. So Satyam also had banks in which they were developing. And so they had control of the software which was printing the bank's letterhead, bank's FD. So our man superbly printed it out and kept it. That is where the auditor came and he saw these FDs, he saw these sales and all, and he believed it. According to the auditor, he believed it. And then he certified it. Later on, in spite of all this, Ramalinga Raju was in deep shit. So finally, Ramalinga Raju himself went to the SEBI chairman, wrote a letter saying, my entire accounts are fraud. All the boost sales have been boosted like that. He wrote a letter to SEBI chairman and he went, then he got, that's all. Now the point here, that is Satyam scam. And obviously on that day, what happened? The Satyam price, which was based on the bogus profit, the valuation, everything would have been based on the bogus profit. It suddenly collapsed. Obviously, many of the people who had invested at that price had sort of come out. Because I also invested in Satyam share at a very low price. And then it started going up. I had the policy at the time of selling. It was a pure fluke. I sold it and I came out of it. In fact, I used to follow Satyam. I used to value it. And obviously, this is the problem. Even a fundamental analyst like me would have to rely on the balance sheet and P&L. Which, if it is fraudulent, as in the case of Satyam, my conclusions also would be wrong. And so I would say. But then it so happened, in my case, because of the stringent approach that I used, I simply could not see Satyam growing at that pace they were talking about, and my value simply came less than the price in the market. So I said, hey, what am I doing? I sold it off. Then, of course, this collapse happened. I am not claiming that I knew that it was fraudulent and all. I was genuinely feeling it was overpriced and I sold it and I came out. That is all I did. I am not claiming any huge intelligence because nobody could have guessed it. It came as a shock out of the blue. In between that, he tried to do some merger and all. He had acquired two group companies that got approved by the board of directors of Satyam. But when it went to the market, the market reacted negatively. So already that negative had started. Market reacted extremely negatively. Then they had to withdraw that proposal. All sorts of nonsense. So that's what. So very good. Finally, of course, it was revived by our own past president, CA Padma Shri T. N. Manoharan, who went in. He took efforts to organize everything. Post this Satyam scam, he ensured that the company was revived and sold, as you rightly say, to Tech Mahindra. Okay. So, in fact, they went for a bidding, and the best bidder was given the company. And that money was used to compensate the existing shareholders, etc., etc., etc. So that is how it happened. Anyway, so why I'm giving you the Satyam scam, because that sent a lot of fear into public mindset about auditors and accounts. So in that background only NFRA was formed to give some sort of an assurance to people that look here. You can rely on accounts because we are also looking at it. We are also monitoring these guys, auditors, whether they are doing properly. A little bit, because of one firm's greed or one man's greed, the entire profession is undergoing unnecessary fattening. And when the scam broke, as a chartered accountant who was also a public speaker addressing various forums, I was also very active in the investor community. I could not take the dais and hold the mic. Half an hour into my speech, when I'm talking about balance sheet analysis, somebody will stand up. You are a chartered accountant. How you can recommend like that? Foolishly, they will argue. What to do? I will give quiet because I can't. I had certain replies for it, but I won't tell it now. When I come to auditing, I'll talk about it. Okay. Right now, it is. Ramalinga Raju was when this happened. There was no act. Act came later. Scam came earlier. 56 law was there, which according to that is one of the reasons for the 13 Act coming in. Okay. Auditor, was he involved in it is a big question. I'm not going to answer that. Or whether the auditor was involved in the fraud. No. Okay. And there was a lot of doubt about the whole thing. And this was not the only scam which happened. There were other scams also. Continuously, there were issues. IL&FS came. Okay, like that. That again was price order. It was like that. It became a sort of a issue. And then people said, let's be careful. Let's have a monitor. That's all NFRA. See what all I know telling now, just for general knowledge and for you to contextualize the concept of a national financial reporting authority. So, Mr. Thakur, if your question is double question, is it the kind of scam? I don't know. Should NFRA intervene in this? You should consult the Minister of Finance and Minister of Corporate Affairs on this. I don't know. It's their decision ultimately. Will they intervene in this at this stage? No, they will not. No, never. They won't go there. Don't worry. Okay. Good. So, just to know the constitution of NFRA, that it has a chairperson, not more than 15. Chairperson is appointed by the central government. Okay, he is not some elected person. He is appointed by the central government. But he will be a person of eminence. He could be a chartered accountant or anybody, a lawyer, a leading advocate, a judge, okay, or a leading corporate, retired corporate director who has a lot of knowledge of finance and accountancy and auditing, etc. Whatever. Idea is he should have maturity and wisdom to handle this post. He could also be a civil servant with a lot of experience in accounting and auditing. Okay. Yeah, NFRA's power is not only limited to AS and SA. They also oversee the quality of the profession. Okay. That's also there. The disciplinary committees are they are also having powers to discipline, to catch hold of audit firms in case they don't comply and all. So that is the one real catch here. But then all companies don't come under NFRA. We'll see that. All companies do not come under NFRA. So all auditors do not come under NFRA. There are some cases which will come under NFRA, which will be handled by NFRA, but others will still come to the institute. The chairperson and members who are in full-time employment with NFRA shall not be associated with any audit firm, including related consultancy firms, during the course of their appointment and 2 years after ceasing to hold such appointment. So, whether C and AG can become chairperson. When he is C and AG, he cannot. Because if he is not C and AG, maybe another posting could be chairperson NFRA. But he can't hold both the positions at the same time. C and AG is not a qualification. It is a position which is an appointed civil servant who is appointed to that position. Okay, as C and AG. So, notwithstanding anything contained in any other law point for the time being in force, the NFRA shall have the power to investigate into the matters of professional misconduct. Now you understand, Roshanji? That's not the only power they have. They can investigate into professional or other misconduct committed by any member of a firm of chartered accountants. Okay, registered under the Chartered Accountants Act 1949. This may be done suo motu or on a reference made to it by the central government. This is something where there is a huge overlap, where they can also do this. ICAI also has disciplinary command. So the NFRA has initiated an investigation. No other institute or body shall initiate or continue proceedings on this matter. This is a little harsh. I mean, or maybe well deserved, because we failed, right? In fact, the gentleman who signed Satyam, we celebrated him. We made him a hero for some time. At least we made him a hero of our institute for some time at least. And then when this happened, we could not how to face the shame. That was the problem. Anyway, so I mean, I have no comments on this. Honestly, personally, I'm neither for nor against. Because if I say as a member, I feel bad. But if I say I'm against, now I'll be doing disservice to the society. Because definitely, maybe we have reached a stage where we need this type of a monitoring. Shame, but what to do? Maybe the complexities of in good old days, we were a very, very regulated and well-behaved profession. And we had people of integrity, honesty, and certain level of stature. Today, it is not like that. So that is the problem. It is a reduction in the quality of the membership that's causing this. So now you have a role to change this. You can decide for yourself that when you become a member of the institute, you will live up to the high standards set by this institute. The institute standards are high. And there are members who most of us believe in these standards, and we are proud of the fact that we are chartered accountants serving society. We strive to be people of integrity, honor, and sincerity. We strive our utmost, but not everybody is able to do this, and that is when the entire profession gets a bad name. So each one of us can pledge that I will be a good chartered accountant, a good member, a proud member of the institute. I will be proud of the institute, and I will ensure that the institute is proud of me. That's all. Each member, if they behave like this, automatically we won't need NFRA. All of us will be capable. But this is the problem. This is the problem. This is my humble view, not connected to the subject, but in general, since we are skating so near to ethical issues, I thought I will give my take on ethics. That's all. Not necessarily, Dhyanesh, not necessary that chairperson should be a chartered accountant. No need. So long as he is a person of eminence and having expertise. If they wanted only CA, they could have defined it that way. They don't want. In fact, most of the time, he may not be a CA. He may be a non-CA only, a civil servant. See, for information, there are many C&AG officers, many officers employed in the Central Control Audit General's office and accounting service. C&AS is also there. Accounting services. So in the accounting services, there are chartered accountants who have extremely good knowledge of this. So such people could also come. We really don't know. We really don't know. Good. So now NFRA is a quasi-judicial body. What do you mean by quasi? QUASI, judicial body. It means it has the same powers as are vested in a civil court. But it is not a court. But for certain limited purpose, it has the same powers as are vested in a civil court under the Code of Civil Procedure 1908. You will come across these wordings in many more sections, many more provisions. Maybe when you come to final, you are studying tribunal, NCLT, same you will find. NCLT is a quasi-judicial body. NCLAT is a quasi-judicial body. So on and so forth. So they are all tribunals, which are not court. Because a full-fledged court, like a magistrate court or a city civil court or a high court or a supreme court, is bound by what is known as a civil procedure code. Whereas quasi-judicial bodies are not bound by such complicated procedure. Still, these quasi-judicial bodies are having the same powers which are available to a civil court while trying a suit, civil suit. What is a civil suit? A civil suit is when one person files a complaint claiming something from another person, contractual obligation or any other non-performance or whatever. So he is claiming. So a complaint is received. Plaint is received. He is called plaintiff. Then the plaintiff, the suit. Now the plaintiff will be filing the suit claiming something from another person who is called a defendant or respondent. So this case will go on. So the hearing, the suit will be heard by the court, which is what you have, which is what happens in court hearings. Okay, it will go on and on and on. My son is incidentally an advocate. Every day he goes to court. He argues some, he wins some. Most of the time he adjourns and comes back for him. But the advocates get paid either way. So the point here is, suit is where civil suit, where it's a contractual or other monetary matter, where some obligation is there and they have not done it. You're claiming some damages or specific, whatever may be. That's called a suit. While trying a suit means while hearing a suit and deciding on it. Trial. Trying a suit, trial. During trial, civil court has certain powers. Some of those powers, like the 4 given below, are available to a quasi-judicial body. Okay. No, sir. It is quasi, QUASI. Quasi-judicial body. It's not like a deemed director, sir. Don't confuse. Don't confuse. Please, don't. Even for joke, don't confuse yourself. Because I hope I'm communicating something very important here. Quasi, because if you understand, because later on you'll come across many of these quasi-judicial bodies. Okay. Later on you'll come across many of these quasi-judicial bodies as a chartered accountant. Please understand. They are a tribunal. They are like a court. Okay. And it won't be one person. There will be bench of 2, 3 like that. They'll be sitting. For your information, your income tax appellate tribunal is a quasi-judicial body. Okay. The GST tribunal is a quasi-judicial body. Okay. So, like that. Please try to understand it in the right spirit. I hope. Okay, because I hope I have not miscommunicated this. And sometimes I'll give you examples and comparisons and all. But this time I'm not comparing it with whatever you are telling, deemed director. Why I'm being very particular, Mr. Abhishek Pandey, is don't get confused. It's deemed director is absolutely different. It's not deemed to be a court and all. It's not a court. But certain powers of court are available. More than that, principles of natural justice will apply in the quasi-judicial body. And one of the important principles of natural justice is reasonable opportunity to be given to the parties for making their statements and all that. It is like a tribunal, absolutely correct. It is a tribunal. It is like a tribunal, but they don't call it tribunal, they call it authority. Okay. So the court, when trying the case, can have discovery and production of books of account and other documents. See, it's like this. When one party is having some evidence which is not available to the other party, it is the duty of the court to ensure that there is a discovery. That is, anything that is in the possession of the plaintiff should be made available, on which the plaintiff is relying, should be made available to the defendant. Okay, similarly, whatever is in the possession of the defendant should be made available. Incompletely should be made available. For example, if the plaintiff is relying on a diary, he can't say page number 2 only I'll give. So the entire diary should be made available, photocopy. So I can go through the whole thing, because you might rely on entry in page 2nd January. But I might rely on another entry which is supporting my view there in that same record, which you produced. Okay, this is called discovery and production of books and of account and other documents. So when something is produced, now you cannot say, I will not give it to you. You know, everything should be given to the other party. Only then I can argue on it. Yeah, otherwise, simply, many movies and all, suddenly one fellow will come rushing into the court, he will produce on paper, and then the judge will see that and say, you are the true owner, you take it like that. No way that can happen in a real court. That document should be first produced in court, accepted on record, then copied to be served on the other party. Then he should give opportunity to respond to it. So many things have to happen before final hearing will come on whether that document can be accepted or not, whether it is a real fact or not, everything. Huge process. Okay, many times in movies you see, suddenly one fellow will rush into the court and give one paper. That too unconnected fellow. He can't even approach the court. He has to go to one of the lawyers. And that lawyer only can approach the court. This fellow cannot go. The judge will take it and read it and say, you can take it like that. You are free, innocent law. No way they'll do that. It's a huge process. It's a big process of law. That's called discovery and production of books. Same thing in tribunal also. You can't just like that produce some document. It has to be filed, paper book, then it has to go through. The members have to see it fully. Then another hearing will be there. At the time they will start. I'm not trying to say that it is wrong. I'm saying that is how it is. Summoning and enforcing the attendance of persons and examining them on oath. See, while investigating the matter. See, remember, NFRA is investigating into the matters of professional misconduct. So they might want to call people. They can summon them and have them examined on oath. So they have to swear and say, I'm telling the truth. No, nothing but the truth and make statement. In case they tell a lie, that's a separate offense for which they can be punished, imprisoned. Inspection of any books, registers, etc. at any other place. Issuing commissions for examination of witness. See, suppose a witness is in a far-off place or unwell or very aged, then they can send an advocate or some responsible officer of the NFRA to go to that person and take his evidence and get his signature, sworn statement and come. So that is called commission for examination of witnesses. I'm just explaining this to you. In fact, sir, don't put this equal to thing, ya Aslam. I get very irritated when you do that. Why can't you write full sentences, sir? Please, as a future student of the institute, you should know how to write full English sentences. Please, don't be lazy. Don't put that equal to sign and irritate me. I hate it when you put equal to sign. Again, using capital letters. Try to avoid both these practices. I humbly request you, Aslam, since you seem to be a good boy, do not use capital letters fully. It's a wrong etiquette. Don't use. 2, do not use equal to. Again, summoning is not recording. Summoning is calling. Summon means to call. Summoning is calling. When I summon you, it means I call you. I send a paper to you saying attend on that day. That is called summons. In fact, the word summons is also there. Courts can issue summons. Quasi-judicial bodies can issue summons and all. For your information, an income tax officer hearing a case under section 143(3) or 147, read with 143, is performing quasi-judicial function. He can summon. Such case, he can summon. Okay. Summon means to call. Okay. Recording happens later. After summoning, you can then examine him on oath and take a sworn statement. That comes later. Summoning is not thing. Yeah, you please don't use full caps and you kindly use full sentences. Stop using this equal to sign. Equal to sign is not a panacea for all evils. Okay. Sometimes the equal to sign is wrong. It cannot be used like that. Okay. Sorry to be so didactic, so particular, but please be careful. Huh? You are a very intelligent student. Why don't you use full English sentences using prepositions, using articles, and using proper English? Huh? Try to learn how to do that. English is not mathematics. Equal to sign is used only in mathematics. Do I ever use any equal to sign in my slides? Yes. When I am giving an equation. When I am defining an equation, you will find I'll give an equal to sign. Otherwise, I will not use equal to. For example, in this slide, if I put NFRA equal to QJB, quasi-judicial body, and it's not good. I won't do that. Please. Understand what I'm saying. And I have been telling this from almost 5th class. I'm telling you, do not use capitals. Do not use equal to. Like that, I've been telling you. If you want to make a statement, make a statement. I will take it. Okay. Okay. Now, where professional or other misconduct is proved, NFRA shall have the power to make order for imposing penalty. In case of individuals, 1 lakh or 5 times the fees received. In case of firms, 5 lakhs and 10 times the fees received. Okay. Debarring member also. See, now do you need notice the difference between the overlap between the institute and NFRA. So NFRA is a greater threat. So they can debar the member for being appointed as auditor or internal auditor or valuer for a minimum period of 6 months to a maximum period of 10 years. Debarring can practice. So this is slightly usurping or grabbing the powers of our council. I don't know how far that is acceptable, but we have accepted it in our own usual style. We have accepted it, but it is something that not for see, your students, I am a teacher, I am teaching the subject 132 of section 4 taught. But whether that is right or wrong and all is an opinion. I don't want to give it. Now, chalo, we are living in a democratic country. Therefore, in case you are not happy with the order of the NFRA, including debarring order, you can go to a higher body. Any person aggrieved can appeal. Any person unhappy with this can appeal to a NCLAT, a National Company Law Appellate Tribunal. Debarring means, see, I don't know, there is a problem. If people are not doing even articles. See, I don't know if you're aware. There are 2 types of chartered accountants. People like me who practice. We run a practice. I have clients for whom I sign balance sheets and I audit them. And I'm an auditor and I do tax audit and all that. We have a firm. Now, similarly, there are people in service who work with the company, like maybe some of you will want to later become CFO, finance manager, like that. So those of us in practice, we have what is known as a certificate of practice, which entitles, I have a certificate of practice, which entitles me to practice as a member of the institute. Just like a doctor has a license to practice, I have a certificate of practice. Now, debarring means removing that certificate of practice. I cannot practice. I will not be able to sign balance sheets. I will not be able to sign valuation reports. I cannot function as a chartered accountant in practice. Debarring, that is what it means, debarring. Okay. Debarred, not allowed to do. Debar means not allowed. So your barring means stopping. So the person who is debarred will not be allowed to practice as a chartered accountant for this period. Bit of a shame, right? In fact, partner Satyam was debarred. The partner of Satyam who signed the balance sheet was debarred. Okay. So debarring usually will be not permanent. 10 years, 6 years, 10 years. He can come back and he can reinstate himself and start. It is felt that 6 years time is given, 6 months or 10 years is given for him to contemplate and find out and maybe rectify his thoughts and become better and come back again. I don't know. What you'll do for the 10 years, God only knows. I'm sure you'll have something to do, don't you? Okay. So, appeal is possible. There, see, for all you know, the gentleman may be innocent. Or he might say, look here, I was negligent, agreed, but I was not criminal. So this type of a penalty is too much. Like that, something like that he can go to. Now, this is very, very important. As I already mentioned, my dear friends, NFRA cannot exercise power in respect of all companies. It can exercise power only in respect of the following companies. You might want to remember this list. Okay. So, at the end of period, new certificate of appraisal, obviously it will be issued. What else? He'll again get reimbursed, See, that is, don't even think of this. This is a shame. Okay, never. Okay, this is what I told at the time itself. Take an oath that you will not. Okay, don't be so technical about this. No, you should not know anything about this at all, is what I would say. Okay. See, even assuming he's getting a certificate of practice, again, don't you think his reputation is gone? Huh? Who will trust him after that? Even assuming he's able to come back. Huh? I don't know. Maybe they will trust him. Who knows? Okay, so NFRA can exercise its powers in respect of the following companies. 1A, there is listed companies, clear, obviously. Public interest involved, so many shareholders, their interest will be protected. But invariably, with all this protection, blah, 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 shareholders are still suffering. See, Adani matter is a classic example. What happened? See, where is NFRA? Now they'll come. When the horse has left the stable, they'll come and they may do an investigation. What happened? No, I'll tell you they won't do it. I'll tell you they won't do. They won't even come near Adani. Okay. Listed companies. Unlisted public company having paid up capital greater than or equal to 500 crore. Turnover greater than or equal to 1,000 crore. Outstanding loans, debentures and deposits greater than or equal to 500 crore on 31st March. Okay, on 31st March. So, unlisted public company having paid up capital greater than or equal to 500 crore. Turnover greater than or equal to 1,000 crore. Outstanding loans, debentures and deposits greater than or equal to 500 crore. On 31st March in the previous financial year. PFY means previous financial year. Similarly, insurance companies, banking companies, companies engaged in generation of supply electricity, etc. Then bodies, corporate or companies referred by central government to NFRA in public interest. That is, central government takes that call and says, even though they do not come in this category, we feel you have to watch this fellow and govern him, see what he's doing. Like that. Bodies, corporate registered outside India means a body corporate incorporated outside India. Technically, it will come under the heading of foreign company, which are subsidiary or associate of A to D. So above this A to D fellows, if they have a foreign subsidiary or a foreign associate, that foreign subsidiary or associate also, NFRA has the right to investigate. Okay. Hope this is clear. So here again, continuing the same thought, we have already seen A to E we have seen, right? Now one more. Companies, we are seeing one more. A company or body corporate referred to in A to D, we saw earlier, provided is registered in India. Okay, A to D, it is registered in India. It's a subsidiary or associate company, a body corporate is outside India. But they are putting one more condition saying, income or net worth of such subsidiary or associate company exceeds 20% of the consolidated income or consolidated net worth of such body corporate, such company or body corporate. the income or net worth of such subsidiary or associate company exceeds 20% of the consolidated income. Consolidated net worth. So, let us say that there is a listed company. It has a body corporate registered outside India. Now you have to check up what is the income. Also, what is the net worth of that subsidiary or associate company. Also, consolidated income or consolidated net worth. This subsidiary or associate company ka income or net worth should be more than 20% of the consolidated. Otherwise, it is seen as not material and you can ignore it. This is for the purpose of this clause, this is a clarification given. For this clause, they are giving you a further clarification. Okay. Also, NFRA can recommend accounting standards and also auditing standards of auditing. So, obviously, who will give it? They will take it from ICAI, put it on a plate and give it to the central government. Then central government will notify it under the income tax act. Under the companies. Okay. So, yeah, in respect of means for. Correct. Companies in respect of, not necessarily. In this context, it is not for. Companies in respect of which. Sometimes it can be. Okay. See, English is not such an easy language to write. Because words have different meanings. Contextually, they will change. So, I don't know how to say this, but somewhere, it would be great if you could have learnt English when you were young. See, most of the thing, when you speak English, when you are young, you get the natural grammar and the natural syntax of it. Problem is somebody reading in vernacular and then suddenly reading English as a foreign language. The mistakes that a vernacular speaker tends to make while speaking English is, they think in their mother tongue or whatever. I use the word vernacular rather than mother tongue. Because for many of you, Hindi may not be a mother tongue. Hindi may not be your mother tongue. But when you speak in a vernacular language like Hindi or any other vernacular language, it could be Malayalam, it could be Tamil, it could be Telugu, whichever language, you tend to think in your vernacular and translate into English. And when you do that, the resulting sentence comes out very funny. For example, a South Indian like me, see, right now I'm speaking English to a public audience where I'm trying my best to speak English. But suppose I'm speaking to somebody casually. Once I remember that I was speaking to Professor K.S. Anantaraman. We were both in Bharatidasan Institute of Management. When in the evening, after the classes, I used to conduct classes. I'm a visiting faculty for the various B schools, including Bharatidasan Institute of Management, Trichy. Where what happens is I used to go there with Professor K.S. Anantaraman, and then in the evening when we used to relax in the room, when I was telling my life story to him, some problem that I had in my life, and I said, sir, I went and gave him that money, sir, like that. Some context, forget it. Something happened in my life. In spite of that, I helped that person. I was willing. So, sir, I went and gave him the money, sir, like that. Professor, KSA, my guru, was not bothered about my emotions, but he was bothered about my English. He said, Shrikant, why are you saying went and gave? Simply say gave. You gave the money to him. Why you went and gave? Do you know why I use the word went and gave? Because in Tamil, the equivalent of it would have been, if you don't know Tamil, I'm sorry, but in Tamil, if I was saying this, I would have said, Naam poi koduthen. I went and gave. So when I translated automatically, see how it happens. So in spite of a disciplined speaker like me who has trained himself not to think in vernacular, not to translate from my vernacular or it so happens Tamil is my mother tongue. Okay, so I can be proudly say Tamil is my mother tongue, and but the problem is sometimes it happens to all of us. So think what about it? No? That's one way of improving it. Sorry, this unnecessary comment about English and all is not warranted, but think about it, because unfortunately, this examination is written in English by many of you. Therefore, a little bit of effort in improving your English would not go wasted. Think about it. Okay. But though, of course, examiners are ready to correct any English, so long as the broad meaning is there. But even then, if you're able to speak clearly and write clearly, your chances of getting more marks are there. So in that spirit, I am giving this to you. Again, Aslam goes back to capital. I don't know why he loves the capital. Auditing standards are standards of any attempt in that applicable. Why are you giving these definitions, etc.? Did I ask you for it? Did anybody ask you for it? Are we asking you for all this? Please do not waste, because when you put something there, I'm reading it, and when I'm reading it, I'm wasting my time. Please do not do this, Aslam. So your assumption is that these students do not know what is an auditing standard, or that I do not know what is an auditing standard. I do not know the definition. What is your assumption here? Please do not waste anybody's time supplying information that most of us know, or if we don't know, don't worry. I am here appointed by the institute to provide knowledge to students. If necessary, I will provide it. Okay, please be a little more sensitive to what I am saying, Aslam. I know you are so interested in my classes, then you should obey my rules clearly. Please do not waste our time by putting this type of unnecessary educational activities. If you want to educate people, form a small group of students, have combined studies, educate them. At least do some service to your fellow students in your native place, where call about 5 or 6 students, educate them. That will be better. I used to do that. I used to conduct combined classes. Some subjects I will take. Operations research, another person will take. So we'll all learn. That's a good idea. Combined studies works. Some knowledgeable man like Aslam could teach law, or any subject he could teach. For the purpose of recommending accounting standard or standard. So this is one more thing. Recommendation of accounting standard and auditing standards. Of course, the NFRA can also seek additional information with the ICAI on the recommendations received under Clause A, if any, etc., etc., etc. Okay. So the NFRA is a very totally very well said. Abdul now says he is the chat GPT of our class. Agreed. I am not a great fan of chat GPT. You are not obeying me, sir. You are simply telling you are obeying, but you are not obeying. If you are obeying means I don't want one more knowledge input from you in my session. If I am asking a specific question, give me an answer. I will be happy to take it. Or ask a doubt. Any number of doubts you ask, I will clarify. Okay. Don't put this equal to and all. Can we fund a private trust in the CSR policy? Sorry? I have not taught CSR. Now let me come to CSR, Baba. I will be coming to CSR. At that time, you kindly, chat GPT. Okay. See, at least chat GPT will only answer questions that we are asking. I have not even asked the question. I have not even asked anybody, what is accounting standard? Kindly give the definition. I have not even asked that. Okay. Punishment in case of non-compliance. If a company or any officer of a company or an auditor or any other person contravenes any of the provisions of NFRA rules, the company and every officer company who is in default shall be punished under the provisions of section 450 of that. See, 450, where there is no other penalty, 450 will apply. Where no section penalty is where penalty is not prescribed in that section, you can refer to section 450. That is not in your syllabus. It is in final syllabus. You will be taught. So this just for your information. In case of default, where no penalty or fine is, just for your information, this is not in your syllabus. Since immediately you will ask me, sir, what is section 450? Here you have it. This is a section where no penalty is prescribed in any section. When there is no penalty or fine is prescribed in any section, but there is some duties are there or some responsibilities are there, then if there is a default or failure, you have to refer to 450 for the penalty, because no penalty has been prescribed in that section. This is an omnibus section, 450. It's a common penalty, company and every officer up to 10,000 rupees, where the continuing offense, 1,000 rupee for every day after the first. Okay. You need not remember this. 450 is not in your syllabus. If you remember section 450, it is enough. You don't have to remember the penalty. Sir, kindly just wait till I come to CSR. Again, I am not able to understand your question. That is another problem. But let me come to CSR in a very short way. We'll do it. So the NFRA will meet at such times and all that. It can appoint a secretary. These are all government employees. Okay. Head office of the NFRA shall be at New Delhi, and the NFRA shall meet at such places in India as it deems fit. All this is purely procedural, not very important. NFRA shall maintain accounts as prescribed by the Controller and Auditor General. The accounts of the NFRA shall be audited by the Controller and Auditor General of India. The accounts of the NFRA are audited by the Controller and Auditor General of India. See, the C&AG is the government auditor. C&AG audits the government of India, central or state. So that fellow only can audit NFRA. Okay. And the audited accounts together with the audit report thereon shall be forwarded annually by the NFRA to the central government. Along with the NFRA also should prepare an annual report. That report also will be forwarded to the central government with its activity report. Then that said report together with the audited accounts and the CAG's audit report will be placed by the central government before both the houses of parliament. Friends, that last line is very important. When anything is placed before both the houses of parliament, what happens to that document? Now you can answer. Aslam, you now tell me. When anything is placed, so report of a commission, audit report of NFRA, when it is placed before both the houses of parliament, what happens? What is the effect of it? Yeah, while Aslam is thinking a real reply to a question that I have asked, let us go to Abdul. 440 is general penalty and no, don't confuse. See, 447 is a totally different section. 447 is meant for penalty where there is a fraud, not criminal offense, where there is an intentional fraud. Okay, where the intention to defraud is there or they have caused any loss. Okay, illegal gain or illegal loss. Okay, then 447. Otherwise, don't confuse with 447. Think differently. Most sections, when we have been seeing for the last so many classes, whenever I taught a provision, in that provision itself says subsection 7 or subsection 12, we'll have the penal clause also. The penalty will be prescribed. But there are sections, for example, like this, where 132, where no penalty is prescribed in that section. See, in this case, 132 refers to 450. There may be a section which does not refer to 450 also. Even then, if the section does not provide for a penalty and there is a default, then the penalty will be as per section 450. This is 450. So don't try to combine 450 and 447 and become confused. Alag alag. 447 alag, 450 alag. 450 is meant for a different purpose. But they come nearby 447. See, these are all miscellaneous topics. In fact, when you come to final, inshallah, if I am teaching that topic, I will teach all this. Again, miscellaneous topics. Okay, so we have, other than Aslam, hey, it doesn't become an act, yeah. Only when a bill is proposed in parliament and it is approved by both the houses of parliament and gets the assent of president, notified in the official gazette, it becomes an act. If any paper is placed before, see, look at the word used there, placed, not even approved, placed. Yeah, 450 is a general penalty provision. Where no penalty has been prescribed in a section, 450 will apply. How difficult is this to understand? Yeah, where no penalty is prescribed in a section, where it is not as if there is no penalty. 450 will apply. Okay. Not, yeah, your Abhishek Pandey is very near. It deemed that the government of India is aware. Not only the government of India is already aware. The central government is aware. They are only forwarding it there. Who are sitting in the parliament? Who are the people sitting in the parliament? They are not central government servants. They are the people's representative. Each of our representative is sitting there. When they come to know about it, every citizen of the country comes to know about it. It becomes a public information. It is not a classified document. It will be published in the parliamentary proceedings. Any citizen of the country has access to it. And not necessarily Right to Information Act. It's a public available information. You can get a copy of it. Okay? Online. Exactly. Beautifully said, Dhyanesh. It becomes a public document. And not under the Companies Act, under the Constitution. Okay? So that you can actually go and anybody can say. It's just for your information, I'm telling you. Because when the parliament it's placed before parliament, every people's representative is deemed to know about it. And once the representative of the people, their representatives come to know about it, it is as if the people have been informed. And it is any one of us can ask for it. and take it and talk about it for your information. See, the Sarkaria Commission about the atrocities committed during the emergency was such a public document. It was placed before both the Houses of Parliament, but no copies were available for a long time. About 6 years ago, 7 years ago, one copy was available to the President's office. That one copy was traced and brought to light, and it was published, republished. I have a copy of it in my library, Sarkaria Commission report. They have printed only some limited copy edition, so I bought one and I'm keeping it as a public record. Otherwise, that was not even available. That report, it is a public document. Nobody can refuse to give it. But whenever application goes to the government, the then government, they'll say not available, not available. We are searching for it. It's not to be found like that. All copies are burnt. Only one copy was available with the President of India. It was made available. President's office has a library. In that it was there and it was made available. And because once the citizen requests, it has to be given for information. But now it's available freely. Sarkaria Commission report, it is available as a published document. Even then, it's rare. Very few copies were printed and only few of us who are interested bought it and kept it. So happens I have a copy of the Sarkaria Commission report, which is published for your information. Okay. Now, 132 over 133. Central government to prescribe. I think, again, Dhyanesh, don't confuse with section 399. I don't know which 399 you're talking about, but this is under the Constitution. But you're right. It becomes a public document. That way you're right. Central government to prescribe accounting standards. Okay. So central government prescribes accounting standards. Where NFRA is constituted, then recommendation by an ICAI and recommendation examined by NFRA. If NFRA is not constituted, then recommendation by ICAI and examined by another body which was there before NFRA. That was NACAS, National Advisory Committee on Accounting Standards. It was sort of an intermediary body. Now NACAS is not there, NFRA is there. So ICAI recommends it and sends it to NFRA. It is examined by NFRA. That's a real joke. And then it goes for central government, so prescribes it as an accounting standard. Right? So at last I have come to CSR, Corporate Social Responsibility. Okay, CSR. Let us see. Voraji, kindly reword your question, not very clear. Can be funded private trust in the CSR policy? Okay. Whether as part of the CSR policy, a company can fund a private trust. I think I have understood your question. Okay, let us see. That question will be answered through my session. Dhyanesh Shingle is asking a very fundamental question. Whether CSR is expenditure or appropriation of profit. As it is prescribed, you will be seeing it in the subject, as a percentage of profit, it might be considered as an appropriation. Okay, I will tell you my view. Very strict view. And it's a pure capitalist view. Anti-socialist view. Okay, I'm a pure capitalist. Companies are meant to make money. They are not meant to do social work. They are not NGO. Okay. This is a very important. So, any expenditure incurred for bringing social work, etc., is only going to be out of the profits earned by you. So, it cannot be deducted for calculating the profits. See, you make money, you control the expenditure, you make money, then out of that profit that you have made, you, the board of directors, want to do some charity, do. But technically, it will be only appropriation of profit. So I have answered your question, I hope. ITC, yeah. Yeah, I am not a GST expert, yeah. Yeah, you can't claim ITC anyway. If you are spent on CSR, you cannot claim ITC. Okay. To answer, why should I answer this question at all? You ask the indirect tax faculty, not me. I assume that you're talking an indirect, you're asking a GST question here. Okay. But Dhyanesh, subject not over yet. See, in this case, it is different. Please understand. Under the Companies Act, Board of Directors can give donation to genuine charitable, bona fide charitable trust. Later on, you will be seeing that. Okay. You saw, you remember 180, 181, 180. In that case, you will see. There they have a power to give, contribute to charitable trust. Okay, up to 5% of the average profit of the immediately preceding 3 financial years. That is clearly appropriation. No way you can claim it as an expenditure. But here I have a different view. See, why are you doing the CSR under the Companies Act? Because of your love for humanity? No. Because the government of India says, central government says, MCA says, you have to compulsorily spend this money. The minute the government says you have to compulsorily spend something, it is no longer an appropriation. It is a charge. Because but for this compulsion, why I will spend? It is a statutory compliance. I am complying with the law. Therefore, this could become this particular expense under this section is a charge. Because to run my business, I have to comply with the law. To comply with the law, I have to comply with compulsory CSR provision also. Therefore, as part of running my business only I am doing. But this argument fails miserably. It's an argument. It's a theoretical argument. But clearly, the Companies Act itself, these fellows have told this amount is not allowable as a reduction for income tax purpose. Okay, straight away they said. Okay, which I think is unfair. Hey, you fellows are making me, you means not you, the central government is making me spend compulsorily. I don't want to spend, yeah. All companies may not be good companies. There may be companies run by pure capitalists like me who doesn't want to spend money. See, I will tell simply, company money don't touch. I will give dividend to you. You take the dividend, my dear shareholder, and give. From the dividend you get, you give. Why you should give from the company like that, I may be arguing. But you are forcing me now to do CSR. You are forcing me. Now that you are forcing me to do CSR, that money, that amount should be allowed as an expense against my profit, and you should allow it as a reduction in my income tax, but it's not allowed. Very clearly, Companies Act, what business they have to tell not allowable, I don't know. Here they are telling it is not allowable under the Income Tax Act. Baba. So there is a big complicated issue, but rightly brought out by my friend Dhyanesh, and I have given my view as a pure capitalist. Okay. Tata Group of Tata Trust. Yeah, see, each of the Tata companies will have to contribute out of its profits. Maybe they will pool it in the Tata Trust. See, they will have okay, now that you have mentioned Tata has a huge CSR wing. There are people employed in the CSR wing of Tata. Okay, like that. Many corporates do a lot of CSR, which brings me to the point. I have, before going into the CSR topic, I have expressed my view as a pure capitalist. That is my view as a pure capitalist, very extreme view. Just like you have left wingers, I am a middle right of right. I'm not extreme right also, because I do believe in doing good to society, but not out of profits or not at the cost of profits. Okay, because I owe every pie to my shareholders. I should give every pie back to them or spend it for running and growing this company. Any other expense, in my humble view, is going against my vision, right? But still, if I have surplus and enough, then I can share. So now let's look at the logic of CSR. Okay? Yeah. Yeah, see, exactly, Abdul, it is not covered under 80G also, not 80GG. I think maybe you're intending to say 80G, because I'm very unclear on section numbers in income tax. I know that there's a section 80G. First time I'm hearing 80GG. Anyway, whatever it is, maybe there is such a section. Maybe I'm not aware. Okay. It is not allowed as an expense. But then I will strongly suggest that in accounting, you should book it above the line only, not below the line. CSR should be booked above the line. Then while computing income tax, you should disallow it. And then again, find out the tax. Anyway, so This is the general view held by world at large. Companies must make profits and maximize shareholder wealth. But this is not to say that that is their only goal. They owe a duty to serve the communities and societies within which they exist, function, and derive the sustenance for their growth. So the real point is, a company does not survive in vacuum. They need the society as, laborers, employees, customers, sellers, so on and so on. So they work within that society. Therefore, they have to also give back to the society or serve the society or serve the communities within which they exist. That within which they exist, you might want to remember, because later on when you come to provisions relating to CSR, you will find that there is an emphasis on doing benefiting the area where they work. The area where they work. The surrounding area should be benefited. So if they fail to fulfill this duty, there will be no more than a cancer that destroys the very thing on which it feeds. So CSR is a conceptual framework that analyzes the various ways in which the corporate community can pay back or return to society a portion of the profits they derive from it. This usually takes the form of social welfare and other measures taken in and around the geographical area where the company operates. The benefits from CSR measures would accrue to the public at large and not necessarily to those who depend on the company. That's why they will very clearly exempt any employee welfare. If you are doing any employee welfare, that is not CSR. Like that they will say. If rightly applied, CSR can be an engine driving the economic and social upliftment of society. Okay. Good. I am not aware by Mr. Manoj Kumar. Seriously, I am not aware. Let me check up and get back. I am not aware whether CSR provisions are unique in India. But I think they are unique. I'm sure no government, no right-wing government would have would feel like doing this. Okay, the bigger thing. Again, in my humble view, many of the so-called charitable activities done are not good, because what we spend should help a person to become independent and self-sufficient. Anything done in that line is good expenditure, worth. So anything done is good expenditure and it is worth it. But anything which is done, which is just giving him food or just feeding them or, doing something very temporary for them, may not be a great thing. Of course, flood relief is there, COVID relief is there, all that. Agreed. It's necessary, it's emergency, it's being done. I would rather that companies seriously look at how to prevent that whole thing, how to make themselves, so next time if there is a calamity, how this village can become protected. Any expenditure done for that will be far better than once the tsunami has struck or once the problem has come, they're all going and giving them clothes and giving them. Okay, good. Sir, I'm going to answer your question, sir. Don't put comment like this. The topic is just now begun. Please wait, have the patience to wait. Once we go into the topic, your question will be answered. And again, read. I have first confirmed that I have understood your question correctly. See, the way in which you drafted that question, I couldn't even understand it. Now only I'm understanding it. You are asking whether CSR money can be used for funding a private trust. Is that the question? If so, then say, yes, sir, that is my question. It will be answered during this session. Don't worry about it. But at some stage, it will be answered. If at the end also it is not answered, I will answer it. Till then, don't interrupt my session and say, answer my question and all that. Okay? Don't interrupt the flow of the topic. Topic is going in one direction. Your question can be asked later on also. I will answer it. The entire CSR topic is over and I still not answered, then you ask me. Because if I go to answer your question, many things I have not covered, I'll have to tell. Wait. Then once I cover the topic, you yourself will get the answer. Okay. The law relating to CSR is contained in section 135 of the Companies Act, read with the company's CSR policy rules. Now, every company, including its holding or subsidiary, and a foreign company having its branch office or project office in India, which fulfills the criteria specified in subsection 1 of section 135 of the Act shall comply with the provisions of section 135 of the Act and the said rules. So, only those companies which are covered by section 135, which we are going to see, are bound to do compulsory CSR. So first you have to see whether that company is covered by compulsory CSR. Okay. Right. Now, in case of a foreign company, we are going to see certain limits based on net worth, turnover, or net profit. For a foreign company, this will be computed in accordance with the balance sheet and P&L account of such company, prepared in accordance with the provisions of section 381 and section 188 of this Act. Okay, both of which are not in your syllabus, so don't worry about it. But maybe in auditing you would have studied. For the purpose of calculating managerial remuneration, 198. Okay. Now, see, if you have already decided that CSR is hard, it will be harder. Whereas if Muhammad Aslam just keeps his mouth shut and his mind open and listens, he will learn CSR. Instead of rushing to give education to other people, you educate yourself now. Just to allow me to give this lecture in the way I do it. At the end of the day, you tell what is your problem, I will answer your questions. CSR is very simple. It's so simple. Okay. Problem is, it's the way in which it has been written by in the Act, they have made it a mess. But once you understand, it's very simple. Basically, there is some certain things which are CSR, which are not considered CSR. Which company is liable to do compulsory CSR? CSR policy, etc., etc. Okay. So now, to begin with, definition of CSR in the rules. CSR means activities undertaken by the company in pursuance of its statutory obligation laid down in section 135 of the Act. Okay. So anything done in pursuance of its statutory obligation laid down in section 135 of the Act is a CSR. But it shall not include the following. Very important. Please concentrate. Don't ask question before I complete. After I complete this particular topic, ask. Till then, don't ask question. But once I complete, ask. Activities undertaken in pursuance of normal course of business of the company. Business activity cannot be CSR. For example, as part of your business activity, you are going to a rural area and doing some distribution of free samples. Your goal is that those fellows will buy your product. Ultimately, you want these guys to buy your product. Okay? You go to the rural area and you say, we are doing free distribution of toothpaste, soap. Now, ultimately, you want these buggers to buy your soap and toothpaste. So, your intention is to promote your business. Then it is not CSR. Okay? Provided that any company engaged in research and development activity of new vaccine, drugs, and medical devices in their normal course of business may undertake R&D activity of new vaccine, drugs, and medical devices related to COVID-19. And this is applicable only for 2021, 21-22, 22-23. Okay? See, this is again a knee-jerk reaction by the MCA about COVID. When COVID was there, they thought COVID, so immediately do something. What can I do? Nothing. Minimum I can do, I can amend the law. I will amend it. That is all they know how to do. Okay? So what they said immediately, how I can benefit here? Any company engaged in research and development activity of new vaccine, drugs, even though it is related to the business of a pharmaceutical company, since it is development of new vaccine, drugs and all, for COVID-19, it is CSR. We can consider it as CSR. Provided that research and development activities are carried out in collaboration with a recognized institute mentioned in Schedule 7 of the Act, in item 9 of Schedule 7. We will see Schedule 7. Schedule 7 gives the list of CSR activities recommended. In item 9, they'll talk about funding of a research institute. So there they give what type of research institutes can be supported. Such a research establishment, if you are doing it in collaboration with them, COVID research, that becomes CSR. Details of such activity shall be disclosed separately in the annual report on CSR. So this is only one exception. Otherwise, any activity connected with the business, normal course of business, is not CSR. Any activity undertaken by the company outside India. So if you want to do CSR, do it in your own country. Don't, I'm going to Sri Lanka and doing service. No. I'm going to Bangladesh. No. Any CSR activity, if you want to claim it as eligible under 135, should be done in India. Exception, training Indian sports personnel representing state or union territory at national level or India at international level, they may have to be trained in a foreign country. Now, that amount that you spend for training of Indian sports personnel is only one exception. For example, you have identified an extraordinarily good hockey player or an extraordinarily good football player, and you want to, coming from a very remote location. So you have identified 15 of them who have huge potential. But in India, we don't have good training for them. The coaches are not there. So you want to send them to, say, Argentina or Brazil, and you want to train them. No problem. You can. Okay. And that becomes a CSR. So if the company spends money for these people going there and getting trained, that is part of CSR. Contribution of any amount, directly or indirectly, to any political party under section 182. See, you cannot contribute to political party and claim it as CSR expense. But 182 is there. Under 182, you can contribute any amount to any political party. No restriction. But it won't qualify as a CSR. But that's a double thing now. You give to a political party and you also claim it as CSR. Wow, not allowed. Any contribution to political party, not CSR. Activities benefiting employees of the company. Employees as defined in section class K of 2K of the Code of Wages 2019. So if you are any benefit to employees, however good, for example, giving scholarship to children of employees, sorry, not CSR. You can give. Nobody can prevent you from giving a scholarship to your employees' children. Okay. If you may form a trust and give and all, that way you can escape perquisite also, if you are under the Income Tax Act for them. But the point is, that cannot be CSR. You can do it, but it won't qualify as a CSR. Activities supported by the companies on sponsorship basis for deriving marketing benefits for its products or services. See, where your goal is to market your product or service and you're sponsoring an event or something, for that purpose, it is marketing, not a CSR. Okay. Activities carried out for fulfillment of any statutory obligation under any law enforced in India, not a CSR. You are merely doing it, for example, under the Factories Act, you have to set up certain facilities and all, toilet, etc., or plant certain trees and all that, make it environment friendly. Hey, all that is not CSR. It is yours complying with the statute. Okay. Yeah, if there is an intention to earn something out of it, there is no CSR. Okay. Now, Schedule 7, quickly. It's too boring, and you will never be asked directly what are the matters specified under Schedule 7. No. Okay. I'm not aware, ma. Seriously, and you also don't be bothered. So long as it is benefiting employees, it is not a CSR, straight up. Okay. Or else you Google it and see. Okay. It's not an act, it's a code. I think it must be under the Workmen's Compensation. No, it must be under the Industrial Disputes Act. I will check up maybe, but it's not relevant. It's waste of your time if you do it. This must be under the Industrial Disputes Act. Okay. Now, so Schedule 6 gives a list of activities which are recommended, which only you can do as CSR. Eradicating hunger, poverty, malnutrition, promoting health care, including Swachh Bharat, okay, etc., helping central government. Promoting education, including special education and employment, enhancing vocation skills, especially among children, women, elderly, and the differently abled and livelihood. Promoting gender equality, empowering women, setting up homes and hospitals. I mean, what, Rotary clubs do, social clubs, they're all part of the game. Okay, other facilities, etc. Ensuring environmental sustainability, ecological balance, protection of flora and fauna, animal welfare. In fact, many of our clients in Tamil Nadu, they have one laudable goal of Gorakshana. That is, they want to protect cow. So they have Go Shala. Whether Goshala can be maintained by a company I have given an opinion. It can be because it comes under animal welfare. You can benefit animals. Animals are also animal welfare. So cows can be maintained and fed. Nothing wrong. Okay. Planting trees. Yes. Agroforestry, conservation of natural resources, maintaining quality. So more tree means soil is held together and there is no soil erosion, etc., etc. So all that is there. Ideally, what you should know before you spend the amount, ensure that you have a study done and it's properly documented and the policy is laid, and then spend according to the policy. Protection of national heritage, art and culture, etc. Restoration of buildings. Why not? See, sir. Promoting art is also a CSR. Nothing wrong in that. Setting up public libraries. Okay. Nothing wrong. Don't think only doing charity is CSR. Why not? See, setting up public library is the best thing that you can do as a CSR. Because once you give access to books, even if 5 people read those books, you will get 5 Abdul Kalams. Okay. For the poor children, if you give them access to books, okay, it's the greatest CSR you can do. Better than feeding that fellow. You can feed him for one day, but if you give him access to knowledge, he will feed himself forever. This is my theory, which is why I do not give charity for anything other than education. I have my own trust. I have a charitable fund. From my own income, I contribute. I don't take any donations. I have a building where I rent out. That rental goes to the charitable purpose. My one floor rental goes to the charitable purpose. And that money is used only for educational assistance for deserving poor people of merit. I give it. That's my philosophy. I will not give for any other purpose. That's me. Okay. Feeding poor. All that is not my cup of tea. Because if I educate one poor boy, he will feed a whole community. Okay. He will earn and feed a whole community. Right. He will feed a whole family and so on and so forth. Measures for the benefit of armed forces, veterans, war widows, dependents, training to promote rural sports, like, for example, Kabaddi, Jallikattu, all that, nationally recognized sports. We saw that now. Paralympic sports, Olympic sports. Contribution to the Prime Minister's National Relief Fund or Prime Minister's Citizens Assistance, PM Cares Fund, etc., etc. Okay. Direct contribution, there you don't have to bother. In fact, this is a escape route for CSR. You don't know what to do, give it to PM. That's all. Prime Minister's fund, he will take care of it, don't worry. Contribution or funds provided to technology incubators, rural development projects, slum area development, disaster management, like that. Okay. Now they also included COVID-19 pandemic under 1, 2, and 9. 1, of course, eradicating hunger, etc. 2, promoting education, and 9, last, disaster management. Sorry, 12 is the last item. So for COVID-19, this is the thing, very thing. I'm not aware of it. Yeah, seriously, I'm not aware of it is the correct answer. Whether the Statue of Unity of Sardar Vallabhbhai Patel in Gujarat was made under CSR by Indian Oil Corporation, I'm not aware of it. That's my correct answer. But the beauty is Indian Oil Corporation is a publicly held corporation. The books are available. You can always download the relevant year. You download the annual report of Indian Oil and you will like to do it. Anyway, thank you, Aslam, for that comment. Don't compare me with that great man. No way. Abdul Kalam is one of the greatest persons who ever lived. Okay, in my humble view, I may be wrong. There are people who will tell otherwise, but Kalam is a different man. See, Kalam, his books, Wings on Fire and all, are great. Finally, nearing his death, Kalam wrote a very small book, which is his autobiography. If you get a chance, you read it. I forget the name of that book. It's a nice book. I read it. Literally tears. This boy from remote south of India. It's a small island called Rameshwaram in the remote south of India. Small poor boy. Goes on to become ISR or German things, flies the rocket, everything, and then becomes the president. I have had the good fortune to meet him once or twice in public places, and I know how great man he is. That's all I can tell. Okay? Yeah. So, Dhyanesh somehow needs a break. I don't know why. Always needs a break. Chalo. Let us take a break for about 5 minutes. But because we have to get into an important topic. Therefore, I'm a small break. Abdul, before I give a break, why are you confusing yourself? Did we say that if it is covered under if it is covered under 80G, it is not CSR? No, we never said that. When such a statement was never made, why do you confuse? PM Care Fund is covered under 80G, no doubt. But why should it not be CSR? What we said, any amount spent for CSR not allowable as a deduction under section 37 as a business expenditure. Are you able to understand? If 80G, if it is eligible, you claim. Okay, which also answers Waraji's question. Did you find any contribution to any private trust like that here? Did you find? No. You cannot contribute to any fund under CSR. But what you can do is, if that trust is engaged in any of these activities specific for that project, you can give a donation. Please understand what I'm saying. You cannot simply write a check to a trust and say, please keep it and do whatever you want. No. They should make a specific application to you under one of these heads. Nothing wrong. For example, you want to support national heritage. There is already an existing trust that's doing national heritage. They got a project which they want to undertake for, say, cleaning up a national monument. Good. That particular activity, they need money from you. You can go through that. Nothing wrong in that. But blindly, you cannot give money to some trust and say, I have complied with my CSR commitment. I hope you understood. Okay. Good. We'll have a small break. Now the time is 9:45, 7 like that. We'll have a small break for 5 minutes. Okay. So, yes, sir. Welcome back from your well-deserved break. Some more questions have been asked. Okay. Is it my spiritual? I don't know. My spiritual experience. Maybe I've not read that book. It could be. I'm not aware of it. Anyway, thank you for that, Mr. Ganesh. Now, coming to the point, this is the most important slide in this entire topic. You have to remember this, because question in the exam would be whether that company is liable to constitute a CSR committee. Please understand the process. Those companies which are coming under this limit or which are covered by this provision have to constitute a CSR committee. Those companies which are liable to contribute are required to constitute a CSR committee have to compulsorily contribute 2%. So first you have to say whether they have to constitute a CSR committee. If they come under this category, they have to contribute. Once you say they have to contribute, they have to constitute a CSR committee, then compulsorily they have to contribute. Are you able to understand? So every company having net worth of 500 crore or more, or turnover of 1,000 crore or more, or net profit of 5 crore or more. So that's what we meant. Do you remember? We said anything connected with, here we said, net worth, turnover, profit. Net worth, turnover, profit. Net worth 500 rupees or more, turnover 1,000 crore or more, or net profit 5 crore or more. Okay. So during the immediately preceding financial year, they should see. So during the immediately preceding financial year, if the company's net worth has reached 500 crore, or turnover is 1,000 crore, or net profit of 5 crore or more, then it shall constitute a CSR committee of the board consisting of 3 or more directors, out of which at least one director shall be an independent director. So compulsory, one director should be independent director, totally minimum 3 or more, out of which one shall be an independent director. They should constitute a CSR committee. So remember, also the board's report shall disclose the composition of the CSR committee, right? Very, very important. Try to remember this. Here the word net profit has been used. The word net worth is already defined in the Companies Act. We already seen it when we saw share capital. The word turnover is also defined in the Companies Act. We have already seen it. Net profit, not defined. Here they give it, in the rule, in this rule, in the CSR rules they give. Net profit means net profit as per the P&L account. From that, you have to reduce profit arising from any overseas branch. Means if the company has a foreign branch, any profit from the, say, Dubai branch should be reduced. Because CSR is going to be done in India. So only the profit earned in India should be used for CSR. This is the logic. So any foreign profit, you can take it out, reduce. Also, dividend received from other companies covered under and complying with 135. Suppose there is another company in which you have got investment. On that investment, you are getting dividend. Now, that company is already covered under 135. Means that company has already contributed from its profit to CSR. From that only you are getting dividend now. Therefore, that can be reduced. This also reinforces the view that CSR is an appropriation of profit and not a charge against profit. Because it is a part of, after all, he has contributed and then he's giving dividend to you. Why again out of that dividend you have to contribute? No need. So the dividend alone can be reduced. So in the other income, whatever dividend you have to find out. Was it received from a company covered under section 135 and complying with it? So that you have to see the annual report of that company and ensure that they are complying. CSR committee has been constituted, contribution has been made, then you need not include it here, you can remove it. So again, the idea is simple. Suppose there are like Tata Group is a classic example. Tata Group companies will be receiving dividend from other group companies. Suppose that group company is also a really huge dividend because my share there will be very high. So the dividend coming will be huge. So, especially Tata Sons, we're holding shares in all these companies. So, the dividend they get will be high. So, out of that dividend, they need not again contribute. So, that can be reduced. After reducing these two items, whatever remains is the net profit. That net profit, if it is 5 crores or more, then you have to. Please note the word or. So, even if one of these conditions is triggered, you are coming under the CSR framework. Profit after tax. Profit after tax. Net profit means profit for the year after tax. Okay. In the P&L account format, you will see profit for the year after tax. Well before preference dividend. See, again you are confusing. Preference dividend will be adjusted only in the notes. Okay. Appropriation. Before that. Before appropriations. Even before dividend. This dividend is not our dividend given by us. It is dividend received by from other company. Yeah. Okay. Good. I wish, this type of comment our Abdul will put, like Alok is putting, okay, sir, clear. Like that, I will not get from Abdul. Okay. Like that, you will put, okay. That's all. That also rarely. See, you know what? I used to conduct physical classes in those days. For nearly 20 years of my life, I used to conduct physical classes. But now I've reduced that and I don't teach physically, more on online. So I'm trying to make it as interactive as possible. That's all. Net worth, you know very well. I don't have to waste your time. I've already taught you net worth. Same definition, 2 subsection 57. Turnover also. Already seen. Okay. Let us not waste our time. Kindly go through the definition again. Now, every company covered under subsection 1 of section 135, which is not required to appoint an independent director pursuant to subsection 4, shall have its CSR committee without such director. See, like Abdul, suppose Kavita Chandak. Overseas means foreign. Foreign. Can you understand foreign? Foreign branch. Overseas. See, there is a sea is there now. When you cross the sea, it is foreign, overseas. Okay, like Kalapani, overseas. Not to go abroad, outside India, overseas. Okay, overseas branch means foreign branch. Okay. So, somebody might ask the question, like Abdul likes to ask questions. No, they will ask, sir, in case there is no independent director, what to do, sir? Then it can have without independent director. That's all. Are you able to understand? Suppose the company is not required to appoint independent director. What to do? Then it can have a CSR committee without the director. Similarly, private company having only 2 directors can constitute CSR committee with only 2 directors. Because here, private companies are not exempted. Suppose they are satisfying this norm, they have to constitute a committee. They may have only 2 directors. So how will have minimum 3? So in that case, they say, hey, you have 2 men, no problem. Okay. With respect to a foreign company, covered under these rules, the CSR committee shall comprise of at least 2 persons, of which 1 person shall be specified under clause D of subsection 1 of section 380, and another person nominated by the foreign company. That is Indian director. The company should have at least 1 Indian director and 1 foreign company. Okay. Now, every company which ceases to be a company covered under 1 of section 135 for 3 consecutive years. So, first they come into this net. Then 1 year they come into the net. Then for 3 years you have to see. If for 3 years their turnover has not gone up net worth, then net worth is reduced. And they are like that for 3 years. Then they can stop constituting CSR committee, complying with the provision, till such time it again meets the criteria, I think. Okay. Where the amount to be spent by a company on CSR, see, you calculate the compulsory amount to be spent, that amount does not exceed 50 lakh rupees. Then there is no need for a CSR committee. The board of directors itself can perform the function of a CSR committee. That is, the company is coming under the criteria of CSR committee, but when you calculate the compulsory amount to be spent, that does not exceed 50 lakh rupees. Then they say it's a small amount, no need for CSR committee and all. Board itself can take account up to 50 lakhs. I'm trying to explain very slowly. Aslam says it's tough. But I'm not seeing any complication up to now. I hope things are going smoothly. If you have a doubt, raise a doubt. I will answer. So the CSR committee will formulate and recommend to the board an annual action plan. The list of CSR projects in the Schedule 7 area, manner of execution, the modalities of utilization of funds, monitoring and reporting mechanism, if there is any need for impact assessment for that, all that. See, basically the CSR committee will have to. Usually, if the amount involved is very high, they will have professional CSR consultants to help them. There are CSR consultants. What they will do is they will connect the company with the CSR activity. There are a lot of NGOs which are doing CSR. So they will identify these NGOs, do an evaluation, and then they will refer them to these CSR companies. So that's a huge business. They get money for that. They charge a bill on the funding. The company will not pay. They will simply kick him out. But the funding, the guy who's taking the money, he will pay. The NGO will pay. Sir, you are a company which had a net worth of, let us say, 2,000, not net worth. Your net profit became 8 crore. So 1 year you had a net profit of 8 crore. Then straight away you have to constitute a CSR committee. Agreed, sir. And you have to contribute enough. Then subsequent year it became 4 crore. Another year it became 4 crore. Third year it became 4.5 crore. 3 consecutive years what has happened? And no other criteria was satisfied. Net worth, turnover, not satisfied. So you are less than the requirement for 3 consecutive financial years. Then at the end of the 3rd consecutive financial year, you are out of the CSR net. Again, when it will come back, when again you meet the criteria, in that year you have to again come back. That is how we have to understand. The idea is exclusion. When the company will go out. See, in some cases, for example, if you are Ind AS and all, once you become covered by Ind AS, lifetime you will have to comply with Ind AS. You cannot say, no, I'm not covered and go out. You have to be there. Not so in CSR. In CSR, if for 3 consecutive years you are not there, then the 4th year you need not contribute. But for the 3 years you have to contribute. Even though you are less. Okay. How much percentage of profit should you contribute? Wait. I'm going to come to that. Okay. I'll come to you. I'll come to that point. So the board of that company, after taking into account the CSR committee's recommendation, will approve the CSR policy, disclose the contents of the policy in its report, and also place it in the company's website, etc., so that any NGO can directly contact them. Ensure that the activities are included in CSR policy and all that. Okay. So the board shall ensure that the CSR activities are undertaken by the company itself or through any of the following entities. Now we come to the answer for, now at last Mr. Vora's question is being answered. Vora, are you there? Or are you available here? Muhammad Abid Ora. Please answer my question, Vora. Now I am answering. How to spend that money? The board shall ensure that the CSR activities are undertaken by the company itself or through any of the following entities. Please understand, contribution to a private trust, not CSR. No. But if that trust is engaged in these activities, then you can give contribution to that trust for this activity. That is, the company is undertaking this activity through a trust. Please understand the difference between carrying on a CSR activity through a trust and or a NGO and contributing to that NGO. Some donation, giving donation. No. Giving donation, not CSR. But you can route that money through the NGO for a particular CSR activity. There's an ocean of difference. I hope Vora is able to understand the difference between the two. Have you understood, Voraji? So if your question was that, I have answered it now. Now, so which type of entity? A company established under Section 8 or a registered public trust or a registered society. In all cases, they should be registered under Section 12A and 80G of the Income Tax Act. 80G also, because there are many entities which are not registered under 12A but not eligible for 80G. So be careful. For example, many clubs, social clubs, they are not eligible for 80G, but 12A they will get. Just be careful. ETG also should be there. ETG you'll get only for genuine charitable trust, where they are doing some genuine, especially in this case, they should specialize in it. Of course, the first class is very wide now, eradication of hunger and all, medical relief, all that you can bring and you can say. And you can say we are doing it through a trust. For example, our Rotary Club, my Rotary Club, where this year I have a portion of my earnings, I'm giving for constructing a toilet for in a corporation school. Near my office, there's a school where poor children are studying from that nearby area. Okay, strictly speaking, I'm not supporting their education, but boss, children are coming and studying in the school here. And this is a very important thing now. Hygienic toilet. So we are constructing a hygienic toilet for them. I also contributed and our trust is doing it. We are also getting CSR. But that company is giving it to us not as a donation. And we can do whatever we want with it. No. Specifically, they are giving it for this project, which is construction of a toilet, which is coming under the CSR list, supporting education, especially hygiene. Swachh Bharat and all it comes. So, Swachh Bharat it may not come, but even without Swachh Bharat, cleanliness is needed. So, we are giving hygiene. Okay. So, why I'm telling, such donations can be given. So, I hope I have answered. See, now Vora will not open his mouth. There he is putting comment, answer my question like that. Now when I am answering, he is not saying whether I have answered or not. Huh? Such entity may be established by the company itself, which answers your Tata Group question. Tata can itself form a trust. Tata Group forms a trust. It has a trust. And contribution can be given to that trust. And from that trust, you can make CSR. Provided in all cases, the work done should be covered by Schedule 7. You can't blindly give a donation to the trust and say, my CSR commitment over. No. A company established under Section 8 of the Act or a registered society, etc., established by the central government or state government or any entity established under an Act of Parliament or a state legislature, or a company established under Section 8, etc., having an established track record of at least 3 years in undertaking similar activities. So they are giving you options. So I hope I have given my answer to Mr. Vora's question. Every entity, see now, these entities, these trust, etc., want to get CSR fund. Those trust, etc., which want to get CSR fund, they should get themselves registered under in form number CSR1 electronically. And like that. So they have to file CSR1 and get themselves registered. That's all, nothing else. Unless they are registered in the portal and they have a CSR registration number, they cannot get CSR funding. Okay. You can also employ international organization for designing, monitoring, and evaluation of CSR project. A company may also collaborate with other companies for undertaking projects, all that. So long as that separately you are able to report on the project. You can't say contributed. No, you should say how much of it was spent by you and how much has gone into this. Like that, you should separately report. But jointly you can do. When two companies come together, they can do better. And so on and so forth. Okay. Also, they may be engaging in an ongoing project that in 1 year I may not be able to spend. I can accumulate it and I can spend it in an ongoing project. Having timelines not exceeding 3 years, excluding the financial year in which it was commenced. So, for example, I'm constructing a school for tribal children. So, a multi-year project, okay, which will go on for more than 1 year. Okay. In case of ongoing project, the board should monitor the implementation of the project, which are reference to the approved timelines and year-wise allocation. So we should say every year we will spend so much, and that amount should be spent. Okay. Here we come. How much should be contributed? Now is the answer. I put it in red for you. In case you are getting bored and slipping off, come back. This slide is important. The board of every company required to form CSR committee. Please note how they are saying. The board of every company required to form CSR committee. Means go back to that slide. 1,500 like that. So 5 crore profit. That company shall ensure that the company spends in every financial year at least 2% of the average net profits of 3 immediately preceding financial years. So 2% of the average net profits of 3 immediately preceding financial years. Where the company has not, so you have to find out the average net profits of 3 immediately preceding. That is why they are saying for 3 years, you should see. If for 3 consecutive years you are not satisfying, then you can stop. So you have to see the 3 years average. If that 3 years average, that amount you have to spend at least 2%. Where the company has not completed the period of 3 financial years, then the immediately preceding financial years should be taken. Okay. Preference shall be given to the local area and areas in and around where the company operates for spending the amount earmarked. I already told you now, they should benefit the local area. You can't do something somewhere else. It should be near your company. That is when it becomes CSR. Companies may build CSR capabilities of their own personnel. As I told you, Tata Group has its own CSR team. They have a specialized CSR group. Indian Oil Corporation has a specialized CSR group where there are employees, officers who are engaged in CSR. Like that. Okay. So, implementing agencies through institutions with established track record of at least 3 financial years, but the expenditure on administrative overhead shall not exceed 5% of the total CSR expenditure in 1 financial year. So, total amount that I need to spend out of that 2%, 5% only can be spent for administrative overhead. Otherwise, what these fellows will do, 50% of that, they will put it, all the regular salary, they'll write it as administrative overhead and close it. So they are saying only 5% you can spend for administrative overhead. See, for every ITC or Wipro or Tata, which genuinely doing CSR, there will be 50 Dubakur companies which are trying to siphon the CSR fund out and bring it back inside. They don't want to do CSR. Compulsory. So, the board should ensure that it spends in all. I've already told this to you. Okay. Failure, if you don't spend it, then the board should specify the reasons for spending. If the amount relates to any ongoing project, then you can keep it for the project duration. If not, if it is not an ongoing project, unspent amount should be transferred to a fund specified in Schedule 7 within 6 months. That's all. It goes out of your hands. If you have not spent it, give it to them. They will take care. Okay. Are you able to understand? Failure means money goes. Unless it is an ongoing project, more than 1 year. Then if there's a timeline now, on the timeline basis, you can invest. So the point is this. This year I'm accumulating so that another year I may need more. Then I will spend it. But within that on multi-year period, I should spend it. Then I can retain it even if it is unspent this year. But if it is not a multi-year project, then it has to be ongoing project. It has to be spent. You have to spend it or give it to the fund. Any surplus arising on CSR activity. See, sometimes CSR activity may involve encouraging tribals to create artifacts and selling them. That may result in a profit. That surplus should not be taken to the business profit of the company. It should be plowed back into the same project. And in case it is not spent, it will be transferred to the unspent account and spent in pursuance of CSR policy and annual action. If you are not spent it at all, then transfer it to a fund specified in Schedule 7 within 6 months of the expiry of the financial year. Got it? You have to be very, very careful. Excess expenditure. You can set it off against the requirement to spend up to immediate succeeding 3 financial years. So, in other words, in this year I have spent more than 2%. Then the amount to be spent in the 3 succeeding financial years, now I can set off. Suppose in the next year I have to spend some money. To this extent, I need not spend. The excess amount will be adjusted. The excess amount available for set off shall not include surplus arising out of CSR. That cannot be set off. And the board of the company should pass a resolution to that. Otherwise, if you're spending more than 2% in 1 year, that excess can be carried forward and set off against the requirement for a future year up to 3 financial years. Is that clear? Yeah. Loss. CSR, there cannot be loss. Yeah. If that is a loss, then that is part of CSR expenditure. That's all. It is spent on CSR activity. That's all. It is an expenditure. If company have average profit of 25 crores, so the company does not need to constitute CSR committee. No. You are totally confused, Abdul. You are not at all listening to the lecture. See, the minimum profit for constituting a CSR committee is 5 crore. So this company is having average 25 crore. So out of that 25 crore, they have to calculate that is coming to 50 lakh. In those cases, it need not constitute a CSR committee. The board will become the CSR committee. That is what we said. Okay. Abdul, you are not listening, but you are asking questions. What I suggest, you have not listened to my lecture at all properly. When I was explaining at that time, you have not listened. That is clear in your question. Those three criteria are there now. If that is satisfied, then they have to constitute a committee. Then they have to contribute average of net profit. If that average of net profit for 3 years is 50 lakhs or less, then they need not constitute a committee. The board itself will perform the work of committee, but doesn't mean that they are exempted. Are you able to understand? Please understand. They are not exempted. It's just that they need not form a specific committee. The board itself will become the committee. That's what it means. Okay. You can also use the CSR money for acquisition of a capital asset. But that capital asset should not be held by the company. It should be held by a Section 8 company or a public trust, etc., or by the beneficiaries of the said CSR project or a public authority. So once you, like for example, the toilet. Once the toilet is constructed by the Rotary Club with CSR funding, that toilet will be handed over to the school, the trust, school trust. And that trust only will hold that building. As part of the school building, this will be there. It will not be held by the company or by anybody. It belongs to part of the MOU we have signed. It is given. It will be given to them. Any capital asset created by the company prior to the commencement of the Companies Act shall, within a period of 180 days, should comply with the requirement of this rule, which may be extended by further period, etc. You have to hand it over. It cannot be in the name of the company. Okay. In case any amount is remaining unspent pursuing to any ongoing project, your 3 years is over, still pending, that shall be transferred by the company within a period of 30 days from the end of the financial year to a special account called the unspent CSR account. That will be spent by the company for CSR policy within a period of 3 financial years. Even after the 3 financial years, you have not used it, then the company shall transfer to it the Schedule 7 fund within 30 days from the completion of the 3rd financial year. So, ongoing project, period over, still not spent, open a separate account, unspent CSR account, transfer. From that account, use it for CSR within the next 3 financial years, still not spent, then within 30 days, transfer to Schedule 7 fund. If this chart, which I have given, would be more than helpful to understand this topic, right? Now, a fund has not been specified as of now. Till such time, okay, it will be transferred to any fund included in Schedule 7. Okay, as of now, they have not specified any fund. Okay. The board's report will also include an annual report on CSR. We already saw that now. In 134, we saw that. Okay. 380, 381 deal with foreign company, right? Foreign company should have an Indian director. That's what we saw in 380. Okay. Every company having CSR obligation of 10 crore rupees or more should undertake an impact assessment. Okay. Means they have already spent that money, whether that money had an impact on that community. Some social, see, this will be done by a specialized NGO, usually an international organization, which will study and come out with a report as to the impact. They will do some statistical, they have studied all that, they know how to do it, and they'll give a report. Okay. For that, you can spend 1 crore. Okay. Through an independent agency having outlays of 1 crore, which have completed not less than 1 year before undertaking of the impact study. That study should be completed within 1 year. Okay. So where your CSR obligation is 10 crore or more, for any project having outlay of 1 crore or more, you should undertake an impact assessment. Your annual average CSR obligation is 10 crore or more in the 3 immediately preceding years. Then you should take impact assessment in respect of projects which are having an outlay of 1 crore or more. So for last 3 years average, you have been consistently spending or compelled to spend 10 crore or more. Then after the completion of 3 years, 4th year, any project which has outlay of 1 crore or more, you should conduct impact assessment. Got it? The impact assessment will be placed before the board and will be annexed to the annual report. This company may book the expenditure towards CSR for that. This impact assessment is also part of CSR expenditure, but it shall not exceed 5% of the total CSR expenditure for that financial year or 50 lakhs. So you can book that impact expenditure assessment as CSR, but that amount should not exceed 5% of the total CSR or 50 lakh, whichever is less. This means any expenditure which has been made towards the impact assessment will also be added in the CSR expenses, provided it does not exceed 5%, to the extent of 5% of the CSR. Above that, if you have spent for impact assessment, you cannot claim it as fulfillment of CSR obligation. You have to take it to your normal expense. That's all. In which case, whether it is allowable, don't ask me. Under the Income Tax Act, it's a bigger point. I'm not aware is the right answer. It's a complicated question. See, I have spent it for CSR. Any amount spent for CSR, not allowable. But this is not allowed as CSR. Can I claim it? I don't know. The board of directors of the company shall mandatorily disclose the composition of the... Sir, if you don't comply with the law, you will be punished. That's all. If no punishment is prescribed in this section, 450. That's all. Answer is very simple now, Kavita. If there is a penal provision here, that will apply. If there is no penal provision in this section, go to 450. That's all. You have to disclose the composition of the CSR committee, policy, etc. in the website, if any. Okay? Kavita ji's question is answered. If you have any default in complying with 135, 5 and 6. 135, 5 and 6. 5 is unspent capital expenditure and 6. If any default in 135, 5 and 6, then penalty of twice the amount required to be transferred by the company to the fund, scheduled specified in Schedule 7, or the unspent portion as the case may be, or 1 crore rupees, whichever is less. For officer, 1/10 of the amount required to be transferred to the fund, or the unspent amount, or 2 lakh, whichever is less. So, I hope your question is answered. Section 450 means, brother, I taught, during this class only I taught 450, where no penalty is prescribed in any section, then refer to section 450 for the penalty. I taught now. See, you are educating other people and you are not aware of basics. How surprising, Mr. Aslam. So that means one learning, Aslamji, is stop talking, start listening more. Okay. Only those people who are asking more questions are not listening. Okay. The central government may give general or special directions to a company to ensure compliance with the provisions of this section. Section 135 shall not apply for a period of 5 years from the commencement of business for an IFSC company. IFSC, International Financial Services Center. I already mentioned all this. In this slide, the information is there. Please read it. Don't worry about IFSC and all that, please. They are not important at all. Don't waste your time on IFSC and all that. They have given exemption to IFSC because they are earning foreign exchange. They are running a financial center which are catering to customers outside the jurisdiction of domestic economy, offshore financial center. So they want to give some exemption. So they're saying 135 will not apply to you for 5 years. That's all. Nothing great about this. So it is huge, no doubt. What I suggest now, the crux of it is simple. I have covered it fully because then if I don't cover it, Abdul will come and say I have not covered it. But according to me, the whole thing is not important. Read practice manual. See what type of question they're asking in CSR. Maximum they'll ask whether CSR applies, what is the amount to be contributed, whether it is a CSR itself. Study that alone. Okay, you don't have to read everything. That's the point. Finally, we have to go for internal audit. Compulsory internal audit. The following companies are required to appoint an internal auditor. Listed company should have internal auditor. Unlisted public company, if it has a paid up share capital of 50 crore or more during the previous financial year, or turnover of rupees 200 crores or more during previous financial year. Outstanding loan borrowing exceeding 100 crores during previous financial year, or outstanding deposits of 25 crore or more. If any of these conditions is satisfied, compulsory internal audit. Even a private company should have, provided its turnover is 200 crores or more, or outstanding loans are 100 crores or more. Okay. Then they have to get compulsory internal audit. Who can be an internal auditor? Chartered accountant, cost accountant, other professional. Internal auditor may or may not be an employee. Statutory auditor cannot be an employee, but internal auditor can be an employee. The internal auditor may either be either an individual or a partnership firm or body corp. Audit committee of the company or the board shall formulate the scope, etc. for the audit. Okay. So fairly simple. 138 is fairly simple. Compulsory internal audit. It's a good opportunity for us, is what you're saying, thinking. Fantastic. We have been able to complete this topic within the 8:30 limit. I thought I may need extra time, but I'm not using extra time. But I owe you half an hour. Not including the break, I owe you half an hour. I will need it in negotiable instruments. When I come to NI Act, it's a pretty humongous topic. Another complicated and unnecessarily confusing topic. So there we'll use that extra time. Okay. Or maybe an audit. Fantastic. I hope the class was useful to you, and looking forward to interacting with you on the next topic, which is audit and auditors, inshallah, on Wednesday, 15th of February. Bye. Good night. Thank you.